Ladies and gentlemen, Asian guy here. Today we are not talking about charts, we're not talking about technical analysis, we're not talking about the daily noise of the comics. Today we are talking about war. Not a war fought with tanks and missiles, though that is happening too, but a war fought with ledgers, gold vaults, and trade settlements. We are talking about the final move on the geopolitical chessboard, the move that ends the game, checkmate. For 50 years, since Nixon closed the gold window in 1971, the United States has enjoyed an exorbitant privilege. We printed paper, and the world sent us real stuff. And we printed dollars, and Saudi Arabia sent us oil. We printed dollars, and China sent us toaster ovens and iPhones. It was the greatest deal in the history of empires. But every deal has an expiration date. And the expiration date was triggered this morning at 8:09 a.m. when the U.S. banking system tapped the repo window for $17 billion to save a silver short. You might ask, John, what does a repo spike in New York have to do with China? It has everything to do with China. You have to understand how Beijing thinks. They are not day traders. They are strategic planners. They think in decades. They think in centuries. And for the last 10 years, they have been waiting for one specific signal. They have been waiting for the moment when the U.S. financial system revealed itself to be mathematically insolvent. They know the U.S. has debt. They know the U.S. has deficits. But as long as the U.S. banking system appeared robust, as long as the liquidity was there, they couldn't make their move. They couldn't attack the dollar because the dollar was still too strong. But the silver squeeze changed the calculus. When the too-big-to-fail banks have to print money to survive a $5 move in silver, the shield is down, the armor is cracked, the giant has stumbled. And China was watching. Russia was watching. The BRICS nations, Brazil, Russia, India, China, South Africa, and the new members like Saudi Arabia and Iran, they were all watching the tape. They saw the desperation, they saw the Fed panic, and they realized it is time. The reports we are receiving from intelligence sources and leaks from the upcoming BRICS summit are confirming our worst fears for the dollar and our greatest hopes for gold. The BRICS alliance is finalizing the launch of a new trade settlement currency. This is not a CBDC backed by nothing. This is not a crypto ruble. This is a trade note backed by a basket of physical commodities, anchored by gold. Why now? Because the weaponization of the dollar against Russia proved to the world that the dollar is not a safe haven. It is a political weapon. If you hold dollars, you are holding the debt of a nation that hates you. You are holding the debt of a nation that can freeze your assets with a keystroke. China looked at the Russia sanctions and said, "We are next." They know that when they move on Taiwan, or when the trade war escalates, their $3 trillion in dollar reserves could be frozen. So they have been aggressively dumping treasuries. They have been aggressively buying gold. But buying gold is just defense. Launching a gold-backed currency, that is offense. That is a declaration of monetary independence. That is a dagger to the heart of the petrodollar. The mechanism is elegant and deadly. The BRICS nations control the majority of the world's commodities. Russia has the energy. China has the manufacturing and the rare earths. Brazil has the agriculture. South Africa has the platinum and manganese. If they decide to trade these real assets amongst themselves using a currency backed by gold, the demand for dollars evaporates. If Saudi Arabia accepts the BRICS note for oil instead of the dollar, the petrodollar dies instantly. And without the demand for dollars to buy oil, all those trillions of dollars currently circulating overseas come rushing back to the U.S. This triggers hyperinflation at home. This triggers the collapse of the U.S. bond market. This is the checkmate. And the silver squeeze provided the green light. It showed that the U.S. cannot defend the price of precious metals anymore. The suppression scheme is broken. If China launches a gold-backed note, they need the price of gold to be high. They need gold to be $10,000 or $20,000 an ounce to cover the volume of global trade. For years, the West has suppressed gold to protect the dollar. China has tolerated this because it allowed them to buy gold cheap. They were accumulating. They were filling the vaults in Shanghai and Beijing. They were taking the physical metal from the West at bargain prices. "Thank you for the discount," they said. But now, the accumulation phase is over. The distribution phase is over. The reveal phase is beginning. China holds vastly more gold than they officially report. Some estimates say 20,000 tons. Some say 30,000 tons. When they revalue gold to back their currency, the value of their reserves explodes. They recapitalize their entire banking system overnight. Meanwhile, the U.S. claims to hold 8,000 tons, but nobody has audited it since the 1950s. And even if we have it, we just printed $35 trillion of debt against it. Our coverage ratio is pathetic. China's coverage ratio will be robust. In a world of fiat collapse, the man with the gold makes the rules. The launch of the BRICS currency is not just an economic event. It is a geopolitical revolution. It marks the end of the unipolar world. It marks the end of American hegemony. And it is happening right now, accelerated by the weakness the U.S. banks showed this morning. The repo spike was the blood in the water. The BRICS currency is the shark. And the US dollar is the swimmer who realized too late that he is too far from shore. In the next part, we will break down exactly how this new currency works. We will look at the unit, the proposed name for this settlement instrument. We will look at how it is pegged to gold, 40% gold, 60% commodities, and we will explain why this structure makes it mathematically superior to the dollar, the euro, or the yen. This is the history they don't teach you in school because it hasn't happened yet. But the ink is drying on the treaties. The vaults are being audited in Moscow and Shanghai. The system is ready to go live. And when it does, the price of gold and silver will not just rise, they will reset. They will bridge the gap between the paper world of the West and the physical world of the East. Let's get technical. How do you kill the dollar? You don't do it with a bomb. You don't do it with a speech at the UN. You do it with a better product. The US dollar is a product. It is a service. It provides liquidity and a unit of account. But the product is defective. It loses 5% to 10% of its value every year due to inflation. It is subject to political censorship. It is backed by nothing but the promise of a government that is $35 trillion in debt. If you were a business and your competitor sold a product that degraded by 10% every year and could be turned off if the manager didn't like you, you would switch suppliers. The BRICS are building a better supplier. The proposed currency is often referred to as the unit. It is a concept developed by Russian and Chinese economists, notably Sergei Glaziev. The idea is simple but revolutionary in the modern fiat era. The currency is not backed by the full faith and credit of a politician. It is backed by a basket. The proposal suggests a basket weighted 40% in gold and 60% in a basket of strategic commodities, oil, wheat, copper, silver, etc. Or, in some iterations, simply a direct gold backing for the settlement layer. This creates a currency that is inherently stable in purchasing power. If the price of oil goes up, the currency gets stronger. If the price of gold goes up, the currency gets stronger. It is an inflation-proof currency. Compare that to the dollar. When oil goes up, the dollar buys less. The dollar is short commodities. The BRICS unit is long commodities. For a nation like Brazil or Saudi Arabia that exports commodities, which currency would you rather sell your goods in? The one that loses value, or the one that tracks the value of your own resources? It is a no-brainer. The brilliance of this mechanism is that it forces the West to play by honest rules. If the US wants to buy Chinese goods or Saudi oil, they will eventually have to pay in something real, or exchange their dollars for gold to buy the unit. They can't just print dollars to buy the unit because the exchange rate would collapse. This effectively closes the US gold window in reverse. It forces the US to settle its trade deficit with assets, not debt. And since the US has a massive trade deficit and very few exportable assets compared to its consumption, the dollar would crash against the unit. Now, let's talk about the gold revaluation component. This is the nuclear option within the plan. For the unit to function as a global reserve currency, it needs liquidity. It needs a high enough value to cover trillions in trade. You can't do that with gold at $2,000 an ounce. The total value of gold is too small. So, China and Russia have a vested interest in seeing the price of gold rise. In fact, they need it to rise to roughly $10,000 or even $20,000 per ounce. At $20,000 an ounce, the gold reserves of the BRICS nations become large enough to back a significant portion of global trade credit. This is why the banking crisis in the US is the checkmate. The US banks are short gold. They suppress the price to defend the dollar, but they are insolvent. They cannot absorb a move to $3,000, let alone $10,000. If China announces, we will buy gold at $5,000 an ounce starting tomorrow, the COMEX shorts are vaporized instantly. The US banks fail. The Fed has to print trillions to bail them out, which destroys the dollar even faster. China knows this. They know they have the kill switch. By simply bidding the price of physical gold higher on the Shanghai Gold Exchange, SGE, they can break the COMEX in New York. We have already seen the premiums on the SGE rise. Gold trades $50 or $80 higher in Shanghai than in London. This is the arbitrage sucking the metal from west to east. But when they launch the unit, they will likely formalize this revaluation. They might peg the unit to a gram of gold and then set the exchange rate of the unit to the dollar at a level that implies $10,000 gold. It is a repricing event. And notice the inclusion of silver in the basket of commodities. Silver is a strategic industrial metal. It is essential for the green energy transition that China dominates. By including silver in the basket, they monetize it. They turn it back into money. This is huge for silver stackers. I mean, silver isn't just a commodity anymore. It's a reserve asset for the new world order. The West will try to fight this. They will say the unit is illiquid. They will say it is authoritarian. They will try to sanction banks that use it. But you cannot sanction the majority of the world's population and the majority of the world's resources. The global South is tired of the dollar. They are tired of importing American inflation. The BRICS expansion is key here. Egypt, Ethiopia, UAE, Iran, Saudi Arabia. These countries control the choke points of global trade, the Suez Canal, the Strait of Hormuz, the energy. If they all adopt the unit for trade settlement, the dollar is relegated to a regional currency for North America and Western Europe. This is the bifurcation of the global economy. One sphere is financialized, debt-based, and shrinking, the West. The other sphere is resource-based, gold-backed, and growing, the BRICS. The silver squeeze we are seeing is the market sensing this split. Investors are fleeing the paper sphere and trying to get their wealth into the resource sphere. The mechanism of the unit destroys the exorbitant privilege. It forces the U.S. to live within its means. And since the U.S. government spends $2 trillion more than it takes in, living within its means implies a catastrophic reduction in the standard of living or a hyperinflationary collapse. That is the checkmate. The U.S. has no good moves left. The repo spike showed that the U.S. cannot even handle a small perturbation in the silver market. How can it handle a global currency war? It can't. The shield is made of paper. The sword is made of gold. To understand why this is lethal, we have to talk about oil. Oil is the lifeblood of the industrial world. And for 50 years, oil has been the lifeblood of the dollar. The Petrodollar agreement was simple. The U.S. protects the Saudi kingdom militarily, and the Saudis price oil exclusively in U.S. dollars. This created a permanent artificial demand for dollars. Every country needed dollars to buy energy. But that deal is dead. The U.S. is not the protector anymore. It is a competitor in oil markets, shale. And the U.S. weaponized the dollar against Russia, a major OPEC Plus partner. The Saudis took note. They watched the U.S. seize Russian reserves. They thought, our money is in New York too. Are we safe? The answer was no. So Saudi Arabia pivoted. They started accepting yuan for oil from China. This was the petro-yuan. But the Saudis are smart. They know the yuan is a fiat currency too. They don't want to trade one paper master for another. They don't want to hold trillions of yuan that are subject to Chinese capital controls. This is where gold enters the equation. The Shanghai International Energy Exchange, INE, allows oil exporters to convert their yuan futures directly into physical gold on the Shanghai Gold Exchange. This is the loop: oil, yuan, gold. It effectively allows Saudi Arabia and Iran and Russia to sell oil for gold, bypassing the dollar entirely. This is the prototype for the BRICS currency. The BRICS note just formalizes this process and makes it more liquid. When the BRICS currency launches, it will likely be the standard for energy trade between member nations. The Petrogold. This is catastrophic for the dollar. If the world doesn't need dollars to buy oil, why hold treasuries? Why finance the U.S. deficit? We discussed the doom loop in the bond market earlier. This is the accelerator. If the global energy trade moves to a gold-backed note, central banks will dump their treasuries to buy gold. They will swap the debt of their enemy for the asset of their partner. This massive selling of treasuries spikes U.S. yields, causing the banking crisis we saw this morning. The Fed has to print to buy the bonds. The printing causes inflation. The inflation makes the dollar even less attractive for oil producers. It is a vicious cycle. China knows this. Russia knows this. Putin has explicitly stated that the era of the dollar is over. He called the dollar a toxic currency. By linking energy to gold, they are restoring the energy value of money. Think about it. A barrel of oil represents real energy, real work. Gold represents stored work. The dollar represents a politician's promise. The natural trade is oil for gold. It is the historical norm. The dollar era was the anomaly. We are reverting to the mean. The U.S. banking weakness gives them the window. If the U.S. banks were strong, the U.S. could perhaps engineer a crash in oil prices to hurt Russia, or raise rates to 20% to defend the dollar, like Volcker did. But they can't raise rates because of the debt, $35 trillion, and they can't crash oil because the strategic petroleum reserve is empty. Let's talk about the balance sheet. Let's talk about solvency. A central bank is just a bank. It has assets and liabilities. The liabilities are the currency in circulation. The assets are usually foreign bonds and gold. For the Federal Reserve, the assets are mostly U.S. Treasuries, which are losing value, and mortgage-backed securities, which are losing value. Their equity is technically negative if marked to market. The Fed is insolvent. Now look at the People's Bank of China, PBOC. They hold treasuries, which they are dumping, and gold, lots of gold. Official numbers say 2,200 tons. Real numbers? Likely 20,000 plus tons. They have been the world's largest producer and importer for a decade. They don't export a single ounce. It all stays in China. If gold is $2,000 an ounce, that hoard is worth a lot. But if gold is revalued to $10,000 or $20,000 an ounce, the asset side of China's balance sheet expands massively. They create trillions of dollars of equity out of thin air, not by printing, but by revaluing an asset they already own. This is how they clean up the bad debt in their property sector. People say, China is collapsing. Look at Evergrande. Yes, they have a debt bubble, but they have the get-out-of-jail-free card. They can print yuan to bail out their economy and back that new yuan with the revalued gold. Because the gold price went up 5x or 10x, they can issue 5x or 10x more currency while maintaining the same gold backing ratio. It is a magic trick, but it is a sound money magic trick. It is how Franklin D. Roosevelt recapitalized the U.S. in 1934, revaluing gold from $20 to $35. China is just doing the FDR play on a global scale. This recapitalization leaves the U.S. in the dust. The U.S. sold most of its gold, allegedly, or leased it out, and the U.S. has too much debt. Even at $20,000 gold, the U.S. might not be able to fully cover its liabilities, but China can. Russia can. This shifts the center of financial gravity to Beijing. The yuan, or the unit, becomes the strong currency. Capital flows to where it is treated best. Global investors will look at the U.S., printing to save bond market, first China, gold-backed trade note, and they will move capital east. This creates a sucking sound of liquidity leaving New York and London. The U.S. banking crisis we saw today with the repo spike is partially caused by this capital flight. Smart money is leaving. They are buying gold, buying land, buying foreign assets. The recapitalization of the East is the final nail in the coffin for the dollar's reserve status. Reserve status is based on trust and solvency. If China is solvent, thanks to 20-karat gold, and the U.S. is insolvent, thanks to debt and printing, the world reserves will shift. And what does this mean for silver? Silver will likely be revalued alongside gold. The gold-to-silver ratio might tighten. If gold goes to $20,000 and the ratio returns to its mining ratio of 8.1, silver goes to $20,500. Even at a conservative 20.1, silver is $1,000. China knows the silver story too. They are the world's biggest industrial user of silver, solar panels. They have been draining the COMEX. They want cheap silver for their industry, yes, but they want a strong currency more. They will sacrifice low silver prices to kill the dollar. Once the revaluation happens, the purchasing power of the Western consumer collapses. We won't be able to afford the cheap Chinese goods anymore because our dollars are worthless. This brings manufacturing back to the US eventually. But the transition period is hyperinflationary pain. The checkmate is that the US cannot revalue gold first. If the US revalues gold to save itself, it admits the dollar failed. It admits fiat failed. It destroys the treasury market. Why hold bonds if gold is the real money? The US is trapped in its own lie. China is free to embrace the truth. The weakness in the US repo market confirms to China that the US is paralyzed. They can't raise rates. They can't stop printing. They are a sitting duck. So China will launch the unit. They will announce the gold backing. They will bid gold up on the SGE. And they will watch the US financial system implode from the safety of their gold-plated fortress. This is economic warfare at the highest level. And the silver squeeze is the canary in the coal mine telling us the gas is here. So the game is over. Checkmate has been called. The pieces are just being moved off the board now. What does the new board look like? And more importantly, where should you stand? We are moving from a unipolar, debt-based, dollar-centric world to a multipolar, asset-based, commodity-centric world. The exorbitant privilege is gone. The exorbitant burden of inflation is here for the US. In this new world, he who has the gold makes the rules, but also he who has the silver has the industry. The BRICS nations will dominate the next century because they hold the cards, the commodities. The West will decline, much like the British Empire declined after WWI, drowning in debt and debasing its currency. For the individual investor, this is the most dangerous and lucrative time in history. If you stay in the old system, holding dollars, bonds, or unallocated paper assets, you will be wiped out. Your purchasing power will be transferred to the East. You will be the bag holder of the American empire. But if you position yourself in the new system, holding physical gold, silver, and real assets, you will ride the wave of the revaluation. You are effectively front-running the People's Bank of China. You're buying what they are buying before the rest of the world figures it out. The launch of the gold-backed trade note is the catalyst. It is the moment the theory becomes reality. When you see the headline, Saudi Arabia accepts BRICS unit for oil, you will know the dollar is dead. You won't have time to buy gold then. It will gap up $500 in a minute. You must be positioned now. The repo spike was your warning. The bank weakness was your signal. The checkmate is inevitable. Do not be afraid of this change. Empires rise and fall. Currencies die. It is the cycle of history. What is unique this time is that we can see it coming in real time. We have the internet. We have the data. We can see the vaults draining. We can see the treaties being signed. We are not blind victims. We are informed participants. We are the remnant. the people who kept the flame of sound money alive during the dark ages of fiat. When gold hits $10,000 and silver hits $500, it won't mean you're rich in the old sense. It means you survived. It means you preserved your labor and your legacy while those around you lost theirs to the inflation tax. China and the BRICS are not doing this to help you. They are doing it to help themselves. But their interests align with yours as a stacker. They want higher prices for precious metals. You want higher prices for precious metals. The enemy of your enemy is your friend. So let the paper burn. Let the COMEX default. Let the dollar crash. It is the necessary cleansing fire that clears the way for a return to honest money. The checkmate has been delivered. The king, dollar, is cornered. The pieces are falling. Grab your popcorn, grab your silver, and watch the old world crumble and the new world rise. I am John A.G. The East is rising, the West is printing, and the metal is the only truth left. See you in the new paradigm.